Hello everyone. Continue here. It's been quite some time I dropped the video. I think the last video I dropped was around a couple of weeks ago. I think it should be up to like 2 months now, or thereabouts. Um, I know I'm supposed to be dropping these videos on a weekly basis because the intended thing is to be dropping weekly outlook week by week. But we all know that sometimes other things might come in, and it's not even easy to be a content creator. It's something that I've been finding it hard to get used to, but with time we're going to get there. So moving on, um, this is the recent price action that we had on the dollar index, right? And we've seen that, like I've always been saying, that when it's close to this time of the year, a lot of things will shift, and a little bit of power will shift away from technicals to fundamentals, because this time of the year a lot of policies will change, which is what we are seeing recently. So let's take right into it. So let me take you to monthly time frame. Let's have a monthly time frame because I like to do my analysis, my top-down analysis um, from the highest time frame, right? So that's what I like to do, to be able to see the overall outlook of what's going on, so you understand the major supply and the major demand zones that price might be wanting to tap or move away from, wanting to tap into or wanting to move away from, depending on what you're expecting from price, and also pairing it up with fundamentals, right? So as you can see, this is what I like to take all this. I've already pre-marked all of these before, so I'm going to take them out. So try to give you the overall outlook of what I'm expecting on DXY, coupled with the fundamentals, the policies that are in place right now. So we can clearly see that right here we got this very strong high that was rated around 1985, January 1985, right? Or from this low. This low that gave rise to this high. Then after we got this high, we immediately drop down to another high, which it is safe to say that price is in the downtrend here. Price up until this point, price was in the downtrend. So since this was the most significant high and the most significant low and the most significant high, so we can clearly say that price is trading inside within price is trading within this area. This, well, say this was the first slide that was created, right? So and the rule of a downtrend says that the support price, that's the previous low that was created, is supposed to be violated, while the highs are meant to stay intact when we're in the downtrend. And based off of what we are seeing here now, it is clear that price is kind of like it's looking like it's in the downtrend, right? Because you can see subsequent break of structure being created in the markets. After we got this high, price broke this low, give us this most significant low, we got this high, then price give us this low again. So and if you can see what price is doing here now, if you use your retracement tool, percentage retracement tool, that's fee, drag from that high all the way to this low, you can see that price came to fair value price, which is around 50% of Fibonacci, right? And we immediately rejected from there, of which normally I normally just prefer price to tap into 0.61 because it will even give you more confidence that price is respecting expansion and retracement rule when it comes to the trending markets. The moment where price is giving inconsistent retracements, you wouldn't be able to tell how long the trend will go because it might just fail at any time, right? Which is exactly what happened with DXY. So you can see that price tapped into fair value and rejected, right? Bear in mind that this is and if we change this to premium and discounts arrays indicator, right? You can clearly see that price did not even tap into discounts, it just came to fair value and it barely even touched fair value, right? So let me take it back to, so I like it when price taps into premium or discount zones, right? For it to give you that notion that is after price has tapped into premium zone, in the case of the downtrend, it has no business coming back there again, except if the downtrend has been, exhausted, right? So moving forward, so you can mark out this zone. The 0.61 zone is my sweet spot. It's that zone that markets always respects if its price is meant to go the way it's supposed to go, right? So let's take this out. So I like to mark this zone out. So there's possibility that the extra might still come back to retest that zone. So I like to mark that zone out and just denote and put say premium OTE level. So I like to put that there. So there's possibility that price might could be deployed. If you also look at the fact that after price starts premium here, fair value here, if you look at the next leg of price, you can clearly see what price did here, right? Price came into fair value. Normally, there's something that price does, right? The first leg of retracement usually sets the tone for the rest of the price action, right? Since this one did not get into OTE, right, and came to fair value, the next retracement is supposed to come at fair value and also reject, right, if the downtrend is meant to continue. But we can clearly see that that's not what price did here. Price has even break above 0.618, which is the ultimate zone that price is supposed to reject from, and also closed above 0.79. So already here, I'm already having thoughts about price wanting to come all the way and tap into this premium zone that I failed to tap here, right? So, and also it is also imperative to note that this is 20, I think that's 2021. This is 2001 high, right? That was created around this zone. And if price is supposed to, already we saw that the retracement is not retracing. This is something that has violated, and I expect more upside for price. Basically, this is just what I'm saying on monthly time frame, right? So I'm seeing bullish tendencies on monthly time frame. So the 2021 high probably be used as strong liquidity. So price will most likely target that high. So this high will most likely be targeted by price. So we also write it till 2001 high. Possible strong liquidity. So 2001 high. So now we know that when you are analyzing from time frame to time frame, you need to establish all the biases that you are seeing on each time frame to be able to tell the story of what price will most likely do. That's the right way to analyze. So now that I've established this on monthly time frame, I'd like to go to lower time frame. Let's go to weekly. So this is weekly. So we can see that on weekly time frame, there's something like an uptrend here starting from March of 2008. Price has been trending up, and you can clearly see that there is somewhere price is going to, because when price is trending, it's just an expansion of price. It's just an expansion. Price is telling you that it is heading somewhere, right? So let's see. I like to use the channel to mark out the diagonal trend line that might not be naked to the ordinary high, but we as traders, we know that there's some sort of resistance and what's it called, and support somewhere that is making price to respect that diagonal movement to the upside, which is what we call an uptrend, right? So in this case, you can clearly see that that's what's happening here. So I'm going to mark it out very well. Okay, there you have it. So now you can clearly see that price is heading somewhere. Looking at this channel, because price has been respecting this channel, right? So price is heading somewhere. Come in. And to make it look very. Sometimes you might want to use line chart, because line chart most likely will give you the right, the appropriate levels to mark out. So let's leave it this way. So now you can clearly see that this is what price is doing, respecting this channel, right? So we have our support and our resistance. So the diagonal support and the diagonal resistance is preventing price from either going out of this channel or going below this channel. And we know that this is what we are talking about, price action pattern. We call this a bear flag, right? This is a bear flag, right? Which is price will expand and expand. When it gets to a point, the support gets weakened, and after price has stretched to a major supply zone, we see some rejection. So which is what I've established from monthly time frame. These are the major zones that I'm expecting price will tap into and maybe reject from, right? We might get a price come and take out buy side liquidity from 2001 highs and reject, but I know that this is a major zone that price might want to tap into, because that's like a premium zone from the two pivot zones that was created earlier around 1985 that we saw earlier when Dxy gave us that high around let's see, what was the high? It was this high around the highest points the price has got to, which was around $164, right? So then this low that we got here. So moving on. So now what I'd like to do now is, now we establish that okay, price is in an uptrend inside this channel, right? And we can clearly see that even if we don't use the channel, right, you see that this was the most significant high that we go ahead and we got this low. Price broke that high and give us this one. Price broke that and give us this high. Right? From this low we got this high, and from this high we got this low. And from this low, this was an internal high, and this also an internal low. So from this low we got this high, right? So from this high we are getting another low And we also need to understand that the rule of an uptrend is that all the lows are meant to be intact, right? All the lows are meant to be intact. But so long the uptrend is still valid, the lows are meant to not be violated. So, and if we use our retracement percentage retracement tool, which is a fib, if we take it from this low that we go here and drag it to the most recent high, you can see that price tapped into fair value as well. Did not come into discount, tapped into fair value. And as I said, price will most likely respect what it started with, which is for price to come into fair value here, the rest of the retracement has to be fair value. It will not go beyond that. So let's take from this low to the recent high, which is this one. Yeah, you can clearly see that that's exactly what happened. But there's a I don't know what's going on here. Price has not really tapped into our major zones that we talked about, right? Because we've already danced inside premium zone from this high that was created here. If you use your fib, we've crossed the 0.618 zone. All these ones is price dancing, and we've even closed above 0.79, which is not supposed to happen. So, which is giving us the tendencies that the XY, the dollar index, will still go up. So now, looking at what price is doing here now, you can see that price taps into fair value here. This is 0.61. Price taps into fair value, almost go to 0.618. So some policies, I think some policies happened here, which, because we know that there is some sort of like but this, the precedence of what we are seeing on weekly time frame also is painting a bullish scenario, right? Because I expect price to reject from this zone and start going back up. But we might also see price retest this trend line. Yes, that's also possible. You might see price test that trend line. That's also possible, considering this is like the support and this is like the resistance for price. So price might test the support and see if it's going to break. Then if it doesn't break, which I believe it won't break, they'll keep going back up. So let's drop down to daily time frame. So on daily time frame, this is what we have on daily time frame. Yeah, this is what we have. And bear in mind that there are some. If we go back to monthly time frame, right, you will see that we have some major zones. Like we have this fair value gap, this monthly fair value gap here. Let's change fair value gap to this color. And we also have another monthly fair value gap here. Right. So these are those zones that we'll be looking at. So going back down to weekly time frame. So you can see that after the XY tapped into this resistance, immediately rejected, right? After rejecting, price sold all the way. As the normal thing that price will do after an expansion, we get a retracement, which is what price did. And we marked out using the percentage retracement flow, which shows that this zone is around the 50% mark, right? And somewhere below here is around the what's it called? Somewhere around here is around the I think somewhere around here is around the 0.61 zone, which is this kind of said price will most likely respect what it started with, which is since the first retracement that we saw on weekly time frame, on monthly time frame was retracement into 50%, it's most likely what's going to happen with this one as well. So I can clearly see that when price, and we have like a fair value gap around that zone. So when price dropped down to this, to that 50% mark, immediately rejected, which is what happened around July of 2023, July of last year. Immediately filled that fair value gap and rejected, and price from this demand zone quickly bought all the way and tapped into a major supply zone, which is this monthly bearish fair value gap. So, and after that happened, price also rejected again and came down to mitigate, because you can clearly see that this is like a break of a market structure shift, probably maybe like daily time frame, right? You can see price retraced also into this fair value gap, this other block that we have here, this bullish order block, and also rejected from it. So after price came all the way to this side, failed to give us a break of structure, right? Failed to give us a break of structure, signifying that there's a possibility that there might still be some zones below that price wants to correct, right? So moving forward, so there's already, in terms of fundamentals, we know that policy has changed. The Fed recently cut interest rate by 50 basis points, which is something they have not done in a very, very long time. You can see that the labor sector is slowing down, which prompted the rate cuts, right? Because aside from the labor sector, which is slowing down, the US economy has been resilient, right? Even though inflation has been an issue since the pandemic times, right? So the Fed has been systematically trying to get inflation down to their 2% targets, right? Which is something that they achieved. They achieved the milestone around July of this year. So it should be around June or July. I think that was the time the Fed saw drastic reduction in inflation rates, which is around that July when CPI came out way below forecasted, right? So CPI came out below forecasted, and that is the first time in a very long time that the Feds are seeing huge progress with inflation. So what happened then was the market participants reacted in such a way that they they um, uh, they forecasted that the possibility of a rate cut in September is much more plausible, given the given that inflation is moving to the Fed's 2% target. So since then, GXY has been, so that's one thing that you need to understand. Even though your technicals is showing you something, when it's time for drastic policy changes in the markets, it will defy every logic that you have in terms of technicals, right? Because fundamentals is the is that thing that can change price action, you know. So if you see when we're talking about fundamentals, when we're talking technicals, right, you can clearly see that after price starts into this major demand zone, price has already filled this fair value gap, so he has no problem. He has no issue, or he has no reason to come back there. And even when price come back there, you know that there definitely price is trying to just break above that zone and just keep going up. But you can see what happened. Price failed to break this high, right? And let me move this one. And we can see that during that zone, the price was trading in between this 2023 high and this 2023 low. Right? Those are the major zones. The price was trading inside, right? And you can see that price failed to either mitigate or break above 2023 high, and it's heading straight for 2023 low. So it's only fair, and we already know that Fed said they are going to continue to loosen restrictive measures, right? What does that mean? It means that all the tightening of policies that has been in place since the pandemic will drastically be unwind, right? We'll start unwinding those policies, right? Those restrictive policies, right? Because those policies are put in place to tackle inflation. So now that inflation is moving towards their 2% target, there's no, because now already, yeah, it is looking like they are already too late to cut the rates, because now the tightening is drastically affecting the labor sector. Now it's making jobs, people are not hiring because the cost of labor now has become too high, right? The cost of labor has become too high. Businesses are not getting loans to hold their businesses tight because the interest rate is crazily high. So those are restrictive measures that the central bank will put in place to fight inflation. So since inflation is moving drastically towards their 2% target, there's no reason to hold interest rate that high any longer. So they have to start unwinding on those hikes on interest rates. So which is what we are saying. So they reduce interest rate by 50 basis points. That's huge. So I expect the Dxy to keep going down for at least, excuse me, at least I expect Dxy to, this 2023 is probably going to use that zone liquidity and also tap into discount zone before we see those buys that I'm talking about. That will be like a long buy. This is the most significant. So take that. So we see that now is the policies now that is selling Dxy. So this might be the last line of defense for Dxy, this discount zone. So we'll have this 0.618 zone. That's the first line of defense. Then the second line of defense is this trend line, right? So if we use okay, let's go to move this time frame. Let's see if we have anything. Okay, there's a fair value gap here. There's a fair value gap here. So since this one has been filled, it's no longer useful. So let me just use it. Okay, we have this tiny fair value gap here. That's the monthly fair value gap. So that's the plausible zone that price might want to tap into, because it's obvious. It's obvious. So price might want to tap into this zone before we see price going back up to expect something like this. Expect price to do something like this. Expect price to do something like this. So that's the most plausible thing that I'm saying on Dxy. I'm be honest with you. But if this trend line validates, I'll be expecting price to come and break below this. And if price does that, to hell with Dxy. But I don't. So based on PDRs, right, premium and discount zone, I expect price to still tap into premium, that major high that I talked about, which is somewhere around 1131 points. So what happens when price gets here? That's what I don't know. But I definitely believe that price is coming all the way to this side. But first of all, we need to take liquidity. You can see that this 2023 low is a pure drawn liquidity for price. So price is definitely going to take it. So price is definitely going to take that. So moving forward, so let's drop down to so expecting price to do this, come all the way tap into this, fill this fair value gap and buy. So that would be like a very the most discounted price that you can get on the dollar index now. So don't waste it. When price comes to this zone, take your buys and swing it if you can. Swing it, or just, I don't know, I just believe that's what price will do. So I'm expecting price to get to this zone, or you might even find if you're an intraday trader, right, you might find those dollar pairs that you can short and do similar setup on all those pairs, or conversely do it the opposite um, the pair that is directly opposite to DXY, which is the Euro USD. So you do something like that on Euro USD. But I don't know. The policies is the most important in this period. So I'll quickly just go over. So that basically that's what I'm expecting. That's what I'm expecting. So let's drop down to daily time, 4 hours time frame. So you can see 4 hours starting from. Okay, this is like we got an SMC here. So we got an SMC here. That's a failure swing. Got an SMC here. Failure swing. Then right after which price has been in a downtrend since then on 4 hours, right? Price has been trending low on 4 hours. So we've not seen anything that is violating the downtrend from that price still in the downtrend. So I expect price to still come all the way to this zone before we see any drastic move on DXY. So let's drop down. Let's go to GBP USD. So I also have some. So this is GBP USD. Different charts. So this is GBP USD. So I'll go to monthly time frame to GBP USD. So let's analyze from monthly time frame to GBP USD. So this is, as you can see, this is what we have on GBP USD. You can see the price has been in the downtrend for a while. After getting this, we got this lower low, then we got this lower high, then this lower low, then this lower high, another lower low, lower high, lower low. So basically that's what we have on price. So if you take this and draw like a trend line, right? So this is what we have, because I don't even need to say much. We've already seen that the pound has broken out of this trend line. The only thing that is remaining is for it to come and break this high that we have here. Once this high gets violated, then that's it. Price is going to test this high and ultimately test the upper one. But that's far-fetched, right? I have to take it step by step. So this is just what I'm saying on monthly time frame. Right? This is just what I'm saying on monthly time frame. I see that price gave us a BOS here. So if price is supposed to, neglect, if price is supposed to continue going down, it's not supposed to go past this 0.61. Even if it does, it will quickly reject. But we can see that there's pressure, there's a volume going into the buys that we are seeing on the pound, right? So you can see that, and it's recently just break above this fair value gap that we have, which is another line of resistance for price, which did not hold price. So that being said, you can see that this high now is looking like a drawn liquidity for price. So we also have a possible bearish bearish order block here, which might also be a candidate to resist price. So we'll put that there. So and we have this fair value gap that has turned into an inverse fair value gap that failed to hold price. So we'll mark out that one too. So let's drop down to weekly time frame now. So this is weekly time frame. You can see that after price starts into 0.61 and rejected, it failed to break this significant low, which kind of indicates that price is in an uptrend. Right? So draw that diagonal line, which we use to represent our trend line. Right. So now, price dropped down and found support around here, and after that, this was 2023 high and this was 2023 low. So this high is a strong high for price, right? Because it is the high that tapped into premium and rejected. So if price was meant to keep going down, it's not even supposed to violate at all. So this low is still intact, right? This is an internal low, this is an internal high. So we are not concerned about this too. So as you can see, price violated this high. As price has violated this high now, we already know that the possibility of price getting to this zone is now solidified because this high has been violated, which is because they break a structure. So it has also given us the tendency that price is trending right now. So that being said, now I expect price to continue going up. Even if you look at the policy surrounding the pound now, I think the bank, the last time they called their interest rates was that was in last month. I think that was last month. I think they reduced their interest rates by 25 basis points. I don't know if it was shorter than that. But the UK has achieved the 2% inflation target. They've achieved that like 2 months ago or thereabouts. So and every other thing in the economy is progressing, and everything is doing pretty well. And I think that's to show you that the economy is okay in terms of fiscal policies and all those other macroeconomic economical stocks that they have going on. So already the fundamental is pointing to a bullish pound, which is, if you look against the dollar, there are a lot of things going on with the dollar now in terms of the job sector going very, the level of recess going on in terms of the labor sector in the US now is as a result of holding interest rates at a high level for too long, right? But I think it's still within something that can be redeemed, right? Because even Mr. Powell said it himself that there's such thing as cutting too late and cutting too early. If you cut too late, the country might have gone into recession before you realize it, right? And if you cut too early, inflation might come back faster than you think. So those are the things that they are battling right now. So the debate is on if they are still going to continue, if there are still going to be more interest rate cuts this year. We only have about 3 months left in this year, so we don't know. 3 months here, so we don't know if there will be more. But considering the level of recess going on in the labor sector, there are possibility for 1 or 2 more interest rate cuts, and if that happens, that is going to be very, very bad for the dollar, right? So conversely, if you look at risk assets like the pound, that's a good thing for the pound. So the pound will just keep soaring now, which is, if you look at the technicals, we know that this is the zone that price now wants to tap into, right? And it is very obvious. So, but what I expect next is, after price has violated this high, price might just go all the way to this zone, right? I expect to see small rejection from this consequence encroachment. But if that's not enough to hold price, then I expect these equal highs to be like drawn liquidity for price. Maybe price might take buy side before we sell. But that being said, after price has broken this high now, I also expect retracement to this inverse fair value gap, this monthly inverse fair value gap. So that might also be like a retracement zone for price. So if price, maybe let's say in the coming weeks, if price retraces into this zone, that's like the most discounted price for you. So find a position and enter for a long to this zone, right? So if you use your fib, let's say price buys up to this point here before we reject. So you can see that the 50% mark is around that inverse fair value gap to the power. Price might just buy all the way to this consequence encroachment of this monthly fair order block before it rejects. So if price does that, you might get something like, you can see that if 0.61 zone is directly a few pips below consequence encroachment of that inverse fair value gap. So you might get something like this. Price come here and price continue going back up. So that's like something that is possible that might happen. So I just expect if price come here and rejects, you sell it to this place. Then from here we buy all the way, because I'm still bullish on the pound dollar, right? So I think that will be all for now. This video is already too long, so thank you for watching. Please bear with me. I'll try to do this more often. So putting this in, I'll see you on the next one. And also don't forget to like and subscribe to the channel. That's the only thing that might keep me going. That's the only thing that might motivate me to keep making this video. So that being said, see you on the next one. Enjoy the rest of the week.